Before I get into the details of the topic, I want to just alert you by saying stop getting influenced with the fixed deposit rates notification you get on your smartphones. I still notice my friends and relatives saving their hard earned money in fixed deposits. We as a middle class should understand that with rising inflation and low fixed deposit rates, we can never achieve our financial goal. Coming to inflation, it is the increase in the price of goods and services that decrease the value of money. Now, for instance, if the rate of price of goods is greater than the rate of your paycheck and returns from the invested amount, we as a middle class people will see a negative effect on the purchasing power and quality of life. You will start cutting down your expenses instead of spending it freely, and you'll start compromising on your comforts. There's a beautiful article by Forbes which talks about how inflation is eroding the value of your money. So let me point out few instances and tell me if you can relate. Instead of traveling in three-tier AC frequently, you will sometimes start traveling in sleeper. Instead of buying high quality pulses from supermarkets, you will start buying medium quality pulses. Definitely, we do not have so much amount like banks, but we can think on how banks earn. They earn through your fixed deposits. They lend people on higher interest rates, invest in stock market to generate more returns, lend capital loans to businesses by charging high interest rates, and they give you low returns on fixed deposits. Is there a risk involved in this process? Definitely yes. But banks know how to diversify their investment portfolio to manage this risk. Tell me one thing, we as a middle class people unknowingly take health risks by consuming processed foods, alcohol and whatnot. Do you have enough money for the health issues you will get in future? Yes, then that's great. We also talk about n number of business plan and strategize to mitigate the risk in business. So why can't we learn how to mitigate the risk in investment? The first rule we as new investors should learn and remember is to diversify our portfolio. Don't just invest in one sector or one type of investment. There are multiple sources of generating good returns that beat the inflation. We need to be just curious on how to start and diversify our investment types. One such investment is P2P lending platforms. It's called peer-to-peer lending. Here, you lend your money to potential borrowers who have strong credit score. There are platforms that filter to show you low-risk borrowers whom you can lend money in the range of 10,000 to 1 lakh or more than that, with returns ranging from 11% to 21%, which is more than your fixed deposit. Another type of investment is invoice discounting. Let me explain you with an example. I'm a bottle manufacturing company who received an order from Coca-Cola to manufacture 10,000 bottles. I do not have enough capital or money to start the production. What will I do? I will go to these invoice discounting platform, keep my Coca-Cola invoice with them, and in return, the platform will help me with the capital amount. Who will give the capital to these invoice discounting platforms? You as investors will invest in these invoices. A low risk investment as invoices are raised from branded companies and trustworthy companies. Invoice payments sometimes get delayed, but which is rare, but you will receive the amount. The platform definitely shares an agreement with you to safeguard your investment amount. Coming to returns, it ranges between 10 to 18% depending upon various platforms. Right. Another type of investment which everyone is aware is mutual funds. I know as a beginner, mutual funds do sound risky, but you should think in a long-term perspective. It does definitely benefit you and reward you with stronger returns, and that is only possible through equity mutual funds. Another type of investment is asset investment. You can invest in physical assets such as vehicles, equipments, furniture, leased to corporates to earn greater returns. The lock-in period is usually more than a year. Coming to returns, you can earn up to 15% returns. In my opinion, I think only Grip Invest platform is providing this type of asset investment. And coming to the last type of investment type which I want to talk about is bonds, fixed income instrument where a loan is made by an investor to a borrower. Few common bond types many are aware are corporate and government bonds. It is a form of debt issued by a company or a government that wants to raise some cash. If a company like ITC wants to raise large capital, they can go to bank or issue a debt in the form of bond for investors like us who want to invest. Platforms like Global Pi and Wind Wealth provide you these type of investments, and you can start with as low as 10,000 per month. At the end, I want to tell you by saying that you should always diversify your portfolio. I've told multiple investment types, right? Do you think all will go in loss? No, right? If one investment type gives you negative returns or zero returns, the other investment type will cover it. That's it.